Hello, everyone. Welcome back to our channel and welcome back to the series wherein we discuss the updates about private equity and venture capital. Today's video is very interesting because we have for you an update which was mentioned in Financial Times, wherein it says that because of the differences that have happened in terms of how taxes were collected previously and now the taxes are being collected by the Labour government, there is an increase in the surge in the venture capital trust investments. What is venture capital trust and why is Britain seeing an increase in the venture capital trust investments? For more on that, let's do a deep dive into what has happened. The article says that savers have put in approximately £250 million in VCTs since April, which is up 27% in the year. Why is the reason that most of the people are exploring this option? The most important reason is that investors are rewarded with an income tax relief of up to 30% on up to 200K a year, provided that they purchase the shares at issue and they hold them for at least 5 years. Dividends as well as capital gains are tax free, which are very important. Now, there are a couple of platforms which are available for the same. Now, herein it's mentioned that Hargreaves Lansdowne is launching a new online VCT investment service because of the government's extension of the scheme and tax changes announced in the budget, which included raising capital gains tax from 20% to 24% for high earners. The article goes into depth about the fees that are going to be charged and how this particular option is going to be available for the people, for tax savers. But what is important out here is that I wanted to share with you the graph which shows the increase in the investment in terms of VCTs. And it also says that there was a drop in VCT funding, which was followed by a wider slowdown in the private markets that was driven by an economic downturn and high interest rate. But it shows that we are turning a corner now. And there are 50 VCTs totaling £6.3 billion in assets under management as of the end of October. 43 out of these invested largely in unquoted companies and managed 5.6 billion, and remainder invested in companies quoted on AIM, London's junior stock exchange for small caps. So herein we have for you an update which shows that if you are from Britain especially, and if you are being affected by this new tax regime, then this is something that you can invest upon. And there are various vehicles which are available for the same, but it looks like this scheme has been popular already. But it's just that because of the change in the tax regime, it is getting more popular and more people are investing into the same. Given that you hold your investment for 5 years and you have a particular limit into which you can invest in. So that's all that we wanted to share with you.